Recapping on trade as it played out on Friday's session, Kenyan shares hitting a 2-year high on Friday, extending a 2-week rally led by banking stocks in particular, expected to post good full-year results this week. The main NIC 20 share index rose for the 8th straight session, up 0.6% by the close to end at 4,588 points, as you can see there. That to a level last seen on January the 10th, 2011, when it closed at 4,610.9 points, taking this year's to-date gains so far to 11%. On the foreign exchange side of things, the shilling firmed slightly to close at 87.45.65 against the dollar on Friday, helped by tightening liquidity. Remember, the central bank has been actively mopping up bank supplies via repurchase agreements, lifting the weighted interbank rate for the 17th straight session to 7.99% on Thursday from 5.43% on January the 15th. So with interbank interest rates gradually edging up, most banks had opted to cut any long dollar positions to avoid missing out on the return they get on assets held in shillings. So that a broad look at the markets picture on that end. Let's get straight into some discussion now with Samuel Gichohi. He's Business Development Manager at NIC Securities. Samuel, thanks so much for joining us this morning. Let's get straight into things. We've got the market really eliciting strong investor interest, and that despite the upcoming elections on March the 4th. Where are your confidence levels sitting at the moment?
Well, quite surprising, and seeing that a lot of these activities coming from the foreign side, and so I think the market has defied all odds, and the fact that we all thought, okay, we have an election coming up, and seeing that there was, of course, all that tension probably from what happened in the last elections. I think that just goes to give a positive note on what we've been doing in terms of constitutional, having a new a new constitution rather, and also the fact that we have a lot of systems in place to ensure that everything works, and we have a nice a reformed legal system, and I think that's showing on the market, and that is what is bringing that that positive sentiment. And that said, I think we are still going to see more surprises. I mean, considering we are so close to the elections, the market is still very bullish. We are still seeing a lot of funds coming in from out there, and the local investor hasn't really kicked in, and results season is here, and Absolutely. So the timing can't be better.
Absolutely. Having said all of that, on a fundamental basis, Samuel, you've got to look at the speculation that's come to the fore as a result of those anticipated results, specifically out of the banking sector. That kicks off this week pretty aggressively. What specifically do you have your eye on when it comes to those earnings reports out of the financial services industry?
Well, I'm particularly keen on KCB, Kenya Commercial Bank, and Equity. Cooperative Bank hasn't really seen a lot of activity on the market in comparison with the other banking stocks, and I do expect that if they announce very good results, then we could see a surge in their share price, considering the other ones, KCB, Equity, have already sort of factored in to some extent, because there's a lot of speculation on those. Barclays Bank, I'm not very sure. The price does not really, it's very defensive. Their price doesn't really shift up or down, significantly. But I don't expect so much activity on that, in as much as they're announcing sometime this week, and will probably be the first to announce. But yes, the focus is on the financial sector, particularly banking, and we are expecting good results. I think they have made very good spreads in the last year, considering that interest rates were quite high, and there was upward stickiness for the banks to bring their interest rates down, which means their spreads went got quite high as the base rates came down, and that was a good thing for them.
I've been reading that investors are also keen to see how higher funding costs in the better part of 2012 would affect NIMs and the resulting earnings. What are your expectations in that regard, Samuel?
Come again, please.
Just looking at, the higher funding costs that the banks have incurred for the better part of 2012, how do you expect that to have affected NIMs and the resulting earnings overall?
Well, I think there's usually a lag in that, and that will not show now, which means that we'll probably see that effect towards half year or towards the end of the year, and so that will probably not be reflected in the short term or in the immediate term. And so I think for now we will not see that if there is a surge in costs. Will not necessarily show on their books at this point in time, which means that they're still riding on a high, and I expect that they are going to be showing very good numbers.
Mm-hmm. Let's take a quick look at Umeme. I mean, it goes 1 month without trading at the NSE, and even though the share has yet to register a single trade on the Nairobi Stock Exchange, its share price has lifted to a one-year high of 300 Ugandan shillings. Just how closely are you watching that process? Because this lends to the environment in terms of getting, the processes going and getting these companies to cross-list a little bit more seamlessly, Samuel.
Well, I think cross-listing has been an issue, considering that we are all on different platforms in terms of IT. So the back office systems need to be brought to par, and that will increase the possibilities of arbitrage. I mean, again, considering our exchange rate regimes, we need to also make sure that those are seamless. Well, I'm not particularly for a single currency, but I think that, is anybody trying to trade across the markets will need one very good information sources to make sure that they understand the companies they're trading in that are on different markets. Secondly, they need to be able to know that if they're able to, to do some level of arbitrage, and that is across the markets, buy in one market, sell in another market, if they see that there's a price mismatch. And I think that that is also very closely linked to the background systems, or the systems that we actually use. Because if you look at the system that the Nairobi Securities Exchange uses, the Dar es Salaam Securities Exchange, I'm not sure about the Uganda Securities Exchange, you're going to notice that we are on different, one is on the Sun microsystems, the other one is on a different system. And if those systems are not compatible, then there tends to be a problem in terms of exchanging the information. Absolutely. And that could cause a time gap, which can mess up the market.